Schiller predicted the 2008 housing bubble. Here is his 2022 call. Robert Schiller released a book in 2000 titled Irrational Exuberance. Basically, this guy called the 2000 tech bubble boom. He called the 2008 crash, and he predicted that as well. He says as the pandemic housing boom, he has pushed, again, not very much sleep. As a pandemic housing boom, which has pushed up U.S. home prices to 42% over the past year, fizzles out. It raises question, does Schiller think we're in another housing bubble? On Sunday, Schiller spoke to Yahoo Finance. Home prices haven't fallen since 2007-2009 recession. Right now, things look almost as bad, Schiller said. Existing home sales are down. Permits are down. So that's one thing that's really important is permits are down. We had a lot of people saying the market's going to crash because permits were up and people were building. But as Mark has already stated in this live stream, Mark can't even get his cabinets in. He's been under contract since February 2021. But what they're saying is permits are down. A lot of signs that we'll see something. It may not be as catastrophic, but it's time to consider that. And I think this is where I've been a little bit different than most of my colleagues. Somebody commented this the other day. For a long time, I was very, very bullish on what was happening in the housing market, basically because I was seeing what was happening with the offers and everything. I've been pretty consistent in saying that we are slowing down, that we're going to see a leveling. I think we're finally into that leveling, but we're still year over year up in prices. So I think this is going to persist. And even in this article kind of says what I've been saying a little bit. Not that this article is, validation of what I've been saying, but I thought it was a good article. So here's what he says. A drop in home prices, Schiller says, looks very possible. That's in a backwardation. Can't even say that word. Prices are expected to fall by something like over 10% by 2024, 2025. That's a good estimate, Schiller said. The risks are heightening right now for buying a home. While national home prices declines are rare, they do occur on occasion. It happened in the 80s, 90s, and in 2008. However, 10% declines, like Schiller suggests, are very rare. Only the Great Depression and Great Recession have seen price cuts of that magnitude. If that 10% home price reduction actually manifests a pandemic, housing boom will likely be remembered as a housing bubble. So I think it's really important to take on listen to what happens next year, because I think there's some really good information here. Let's see what the comments look like. Yes, we locked. Sidderly has been awesome. Price range between 350 and 7. That's a pretty big. Ours is around 500. Most of the delays have been due to labor schedule. And that was the biggest issue that I've seen. Sorry, I'm reading the comments here. Most of the delays have been with labor, and that's what I've seen. Especially, we just closed a couple new builds a week ago. It's all labor stuff. So, and that's one thing that's pretty interesting too. As we look at this article and look at these articles about Austin, I have a couple other articles I want to show. There's an article that just came out. We're at 2.5% unemployment rate, which is below where we were pre-pandemic here in the Austin area. Now, the biggest problem Austin's facing is we have a lot of open jobs, but people aren't moving here. So that's one of the biggest things is we need more people to move to Austin, but we're not necessarily affordable for most people. So I think that's, why a lot of people are down on Austin or not happy with Austin is that affordability problem. Tell me in the comments if you think I'm right or wrong on that. But let's continue with the article here. Let me bring it back up. Boom. So, so basically there's three elements to a housing bubble. And I think this is really, really important, and why I haven't been fully into the we're going to crash mode is because there's some things that I'm not seeing that people have seen, that we've seen in crashes in the past. So this, if you don't know who Case Schiller is, or Case Schiller is two people, but Schiller, they put out all these graphs and kind of a lot of information about the market and kind of past data. So, they're pretty reputable in that regard. So the first element is speculation. A textbook housing bubble will see a swarm of investors and speculators rush in to chase soaring home price appreciation. That's something that we saw a lot. And it was something we saw a lot in the Austin market, especially. Not only did home flippers return, but investors also saw their share of single family home prices rise to a record level. Home builders got carried away too. Demand was so fierce that builders decided they didn't need to wait on buyers. And this is the biggest problem that we saw, is that a lot of these builders started building, they started putting stuff under contract, and then they slowed down what they were selling. and just put a bunch of inventory properties. And this is basically what they say here too. In industry, these homes are known as spec homes, meaning speculative homes. I think that's the biggest problem. You know, I just went in and I did a video that came out yesterday, and I met with Highland Homes. Now, I was talking to the reps before I did that video, and Highland was basically saying like, yeah, you know, we didn't do that, so we're not having the problem a lot of these builders have. They only have like 10 homes available in that specific neighborhood. Whereas if you look at the other builders, they have like 20 homes available. So pretty interesting there. Speculation check over valuation check. So yeah, I mean, the second element is overvaluation. A lot of people have said that Austin's overvalued. I would argue that Austin is almost valued at where it needs to be. I think Austin has been undervalued for so long. Now that people are moving here in such mass, now it looks overvalued, but I think it's really just caught up to where it should be. That's me personally. You could agree or disagree with me. Drop a comment on that one. Housing bubble sees home prices go far beyond what incomes historically would support. We're already at that point. That's according to separate studies included by researchers CoreLogic, Moody's Analytics, Florida Analytic University. I think somebody from ABOR, which is Austin Board of Realtors, came out refuting that Florida Atlantic University. I think they had said that we were overvalued. So there was some, I'll find that article. So speculation check over valuation check, but we don't have the third element, a busting. Here we go. But we don't have a busting, but we still don't have the third element, a busting bubble. If home prices don't plummet, it isn't a housing bubble. Well, Schiller thinks a double-digit decline in the housing prices is possible. Many in the industry don't agree. What's interesting is that if you look at the June numbers, June dropped was like $53,000 in the Austin market, which means it was really like an 8.5% decrease. So if we were really close to getting that 10%. If the numbers bounce back up in July, like I'm predicting, we're going away from that decrease. And so there's so many channels out there saying the market's crashing, but they're not following what's actually happening. I don't know. We'll see. I mean, what do you think? I saw our friend, I didn't watch the video, but said that BlackRock and them were selling off all their homes. And I don't know where he got that data. I haven't seen the video. So if you know, drop a comment. While Schiller thinks a double-digit decline in home prices is possible, many in the industry don't agree. Over the coming year, home prices are expected to rise. That's according to forecast models by Mortgage Bankers Association, Fannie Mae, Freddie Mac, CoreLogic, and Zillow. Meanwhile, modest home price declines are currently being forecasted by John Burns Real Estate Consulting, Capital Economics, Zelman and Associates, and Zonda. Why do some industry insiders think that price declines are unlikely? For starters, the country outlawed the subprime mortgages that we saw that killed the market. In 2008. Not to mention homeowners are less debt burdened this time around. That's something that's interesting too, because we had a lot, if you look at a lot of the models, they show that we had the most like equity over the longest amount of time. And now that equity is depreciating with inflation. So we are getting close to that gap closing again. If you look at those. Why do some industry insiders think home prices decline are unlikely? Oh, we got that part. Faint decline, not to mention. Less burdened. There's another reason some firms refuse to get bearish on home prices, a historic underlying undersupply of homes. Our economists have been chiming in for this for a while. The market is slowing down, but homes aren't getting cheaper anytime soon. Price growth will slow, flatten. That's what I've been saying. When compared to the breakneck start of the year, the lack of supply is a fundamental pressure that will keep values aloft. Now, that's something I've been saying for a while. I just don't think prices in Austin are going to drop that much, because as we start to look at some of the articles I have, there's a lot of jobs still coming to Austin. So I just don't see that those prices are going to be coming down, because there still will be demand. If you look at the rental market's stupid right now. But let's finish this up. Our economists have been chiming in for this a bit. The market is slowing down. Our economists have been chiming in on this for a bit now. The market is slowing down, but homes haven't been getting any cheaper. Price growth will flatten, but the lack of supply is a fundamental pressure that will keep values aloft. I just said that. In the eyes of housing bears, like firms like Zillow, are underestimating the possibility of oversupply. In their view, there are chances. Here we go. There are chances all of those spec homes under construction could see markets like Atlanta, Austin, Dallas get oversupplied in 2023. If that happens, it would be a downward pressure on home prices. And I think that's what we've seen, why we saw prices drop so much in the Austin area over the last month, is specifically because we have had so much inventory that has been hitting. Thanks for watching this short of the Real Amigos podcast. For more live streams, hit here. For more clips, hit here. We'll catch you on the next one.